Well, we're excited to be back with the Don and Gino Real Estate and Finance Show and the National Real Estate Cafe. Both of these things we've been doing for so long, and today's chart will share why you need to pay attention to us, because this is good stuff.
That's why I was going to say is we're excited too, because if you look at this chart, let's go ahead and take a look at the slide here. It is showing that this market, this stock market, this is the S&P 500, is resilient, and it has the ability to recover based on where we are right now.
And what you're going to see is you're like, okay, what happened? We've had a couple of these crashes. The last little crash that went all the way down. We'll explain this little line because this is important on why you want to pay attention to our show on a regular basis. But basically, it was the fear of the trade wars. And we had the major crash, the second crash based on the trade wars. So every time you hear something that scares the market, everybody panics for a while. But that line at the bottom, pretty important, huh, Gino?
Yeah, it's almost like the sanity line, right?
Because it is.
If we cross that line, then you should be a little concerned. Now, that doesn't mean it's the end of the world, but usually if you were to cross that line, things can fall off fairly rapidly. So
Right.
it is a warning line to show caution, but it's also a great line of support should we recover from it or bounce off of it, as we call it, which it has right now. It is also something to say, hey, don't worry, we didn't cross the sanity line. Everything's still okay.
They call that double bounce. So the first fear was over the fears of interest rates rising, and the second was based on the fear of the trade wars. And now both of them, people mellow out. They stop being overly panicky. They stop selling their stock, and then they're like, wait, maybe I should get back in.
Yeah, it's and one of the things that's kind of nice too is when you look at the market right now, it's finding some normalcy, right? Even though it looks erratic, what it's really doing is repositioning itself. You have monies flowing out of one division into another area, and it's repositioning itself, and it looks like it's going to continue to grow. And ironically enough, it looks like it's going to continue to grow because it's not growing too quickly.
And that's the thing about all markets, real estate markets included, as long as it's not growing too quickly. But we do have some other charts in the next few days to show you who is hot. And when you you can get more of this by texting NREC to the number 58885. We're a little bit rusty today, huh?
Yeah. So, that's okay. It's okay to be rusty. We're trying to get back in the game here.
All right, you can find out more on donandgino.com.